Hi, this is Gleason. Welcome to Chapter 1 on Bookkeeping and Accounting. This chapter is an introduction to bookkeeping and accounting. This chapter has 14 topics. We have completed the first two topics, that is, the definition and process of accounting and the difference between bookkeeping and accounting. We are now on topic 3. Each topic has its own separate presentation or video. This topic covers the objectives or purpose of accounting as well as its benefits or advantages. Let's start with the objectives or purpose of accounting. Why do we need accounting? Why should we waste our money in buying the books of accounts, spend our time in maintaining them, or pay someone else to maintain them? Well, all businesses have a common purpose or goal, that is, to earn money and make more money than the previous day, or week, or month, or year. In short, they want to improve their business performance. Small businesses, such as a small retail shop, will easily be able to check their daily collections in their cash box and can record if they have done better than the previous day. They may not want to maintain the records. Well, businesses can have good days and bad ones. On a good day, you may earn more money, while on a bad day, you may hardly sell anything. If you have such fluctuations of good and bad days throughout the year, even small businesses will not be able to recollect their overall performance if they try to retain it in their memory. They will find out the result only at the end of the financial year when they have to file their tax returns. In case of large businesses with plenty of daily transactions, it is even more important to record the transactions by not retaining transactions to memory. In case transactions are not recorded, if the overall performance of the business has been good, the owners will be happy. However, if the business has not achieved what the owners expected, it's not only sad, but it's too late. We have wasted a lot of time in knowing that our performance has not been good. Had we known the details earlier, we would have taken certain decisions and done something to improve it. We could have earned more money, but now we have lost the opportunity. For a business, time is money. Loss of time is loss of opportunity and money. This is precisely the reason why we should rely on accounting. Coming to the objective or purpose of accounting. The first purpose is revenue recognition. We need to recognize and record our revenues, also known as earnings or sales. As we have learned, we do not have to rely on a memory but record the sales. This is directly related to your business performance. Next objective is tracking of expenses. We need to track and record all our expenses. We need to collect all the bills, receipts, vouchers, and all documentary proof of transactions, file them in the proper sequence as per the date, and record them in the books of accounts. If we forget to record any expenses, when the accounts are summarized, it will show higher profit and subsequently we will have to pay more tax. On the other hand, if your expenses are more, your profit is reduced and your tax liability is reduced. If we record the expenses, it will be adjusted against the revenue and the actual profit will be revealed. This does not mean that we need to increase our expenses and show less profit. We are into business to increase our profits. What I mean is, if we have already paid for the expenses, we have paid the money for the expenses, so why pay more money for the tax? If we record everything, we can pay the right amount of tax rather than a higher tax amount. The next objective of accounting is to record your transactions correctly. If we do not record, you do not know how many things we may have forgotten. If we record, we need to record them correctly. Wrong records will lead to wrong results. We need to check the books of accounts to verify that all the transactions have been recorded and classified correctly, and need to rectify and correct any mistakes or errors that surface during the verification step. We need not wait for the verification step to rectify the errors. We can even correct the mistakes whenever we notice it prior to preparation of the financial statements. We have an entire chapter dedicated to rectification of double entry bookkeeping errors. The next objective of accounting is complying with regulatory requirements. If we are into business, we need to comply with all the business regulations. We need to pay our duties, different types of taxes, employee contributions to various bodies, as well as file our returns in time. Taxes and duties are our expenses or deductions. They reduce our profits. We need to be able to calculate the right amount of duties or taxes or contributions and pay them in time. Only through double entry bookkeeping will we be able not only to calculate the correct amount and get deductions for the payment, but also provide documentary evidence for all the business transactions as a proof of all the expenses and incomes. Therefore, for regulatory compliance, we need the accounting process. The next objective of accounting is performance evaluation. This is the main objective of accounting. The first four objectives ultimately lead us to this very important objective, measuring our business performance. Business performance is evaluated in terms of profit or loss. The more profit you earn, the better has your business performed. On the other hand, if your business has earned very little profit, you need to take corrective actions and do better next time. It's similar to the student's grade or report card. If the students do not do well, they need to evaluate which are their weak areas and work hard and pay more attention to the weaker areas to improve their scores the next time. Finally, the last objective of account is to report the actual business performance to the relevant authorities. The relevant authorities can be the owners, either a single owner or to all the partners in case of a partnership, or all the shareholders and directors in case of a company, or to all the members in case of a trust or club or charitable organization. Apart from the owners or members, those from whom the business has borrowed money, such as banks or financial institutions, or even private individuals and organizations, will also be interested in knowing the performance of the business. They will be interested in knowing if their money is safe and secure and that they can expect to get their money back with the agreed rate of interest. Now that we have looked at all the objectives of accounting, they sound very practical and logical. There are other factors that impact a business, such as the right location, right product, right price, right audience, right market, etc. Accounting does not consider these aspects. These are outside the scope of accounting. These are marketing and sales related topics. However, if the marketing and sales angle has been well thought about and the business has commenced, accounting can help you in measuring your progress and taking informed decisions. Now let's take a look at the benefits or advantages of accounting. When we say accounting, it includes bookkeeping. Without proper double entry bookkeeping, there wouldn't be much of accounting left. The first benefit of accounting is that it substitutes intangible memory with tangible information. We don't have to recollect and scratch our heads to find out the details of a transaction that took place, say, 8 months ago. If we have the books or the accounting system, we can know exactly what happened. With memory, we can easily forget. Also, memory cannot be verified. On the other hand, with all the books or system properly maintained, we can get all the information we need and it can be easily certified and verified by multiple authorities. The second benefit of accounting, which goes hand in hand with the first advantage, is that accounting provides all the evidence for the information recorded. Without proper evidence, we should not record anything. This evidence should be a proper documentary evidence. Documents can be produced before any authority for inspection, and business transaction documents are also accepted as evidence in the courts of law. The evidence provides a proof of the sanctity or correctness of our business dealings. We need to record only what we have done and provide the documentary proof of whatever we have done. The third benefit of accounting is that it can be verified, and if mistakes or errors are found in time, they can be rectified. It's important to identify mistakes or errors in time. For example, if a receipt has been misplaced and found somewhere after 3 years, sorry, it's all over. It cannot be recorded as the financial year related to the document has already ended. Also, as we learned in the topic on the difference between bookkeeping and accounting, there is a maker-checker concept to verify the books or system and find mistakes or errors. Timely correction is a good advantage to have in accounting, unlike the manufacturing process, where once a defective piece is produced, it impacts the revenue. The next benefit of accounting is knowing our results. We would definitely like to know the results of our hard work. If children go to school, they receive grades or a report card for their performance. Workers or employees receive wages or salaries and even bonuses for their performance. It's the same case with business. Businesses receive profit as their reward. Everyone loves a reward for their efforts. Accounting enables the business to calculate their actual profits or losses after setting aside all the expenses and losses from their incomes or revenues. Another benefit of accounting is knowing our financial position. Apart from the profit or loss, accounting also reveals our financial position. We have heard about the top 10 richest men in the world. How do organizations rank them? Based on their net worth. Net worth is derived from the financial statements. The balance sheet displays all our assets and liabilities, and from that we can easily derive our net worth. The next benefit of accounting is regulatory compliance. As we have seen in our previous screen, if we are into business, we need to comply with all the business regulations. We need to pay our duties, different types of taxes, employee contributions to various bodies, as well as file our returns in time. We need to be able to calculate the right amount of duties or taxes or contributions and pay them in time. Double entry bookkeeping enables us not only to calculate the correct amount, get deductions for the payments, and comply with regulatory requirements. The next benefit of accounting is that it provides information to the management whenever needed. If the management requires certain information for the purpose of decision making, they may request for certain accounting information. On request, we can easily extract the requested information from the books of accounts or the accounting system and present it to the management in a presentable format. Accounting enables us to refer to the information required and extract them as and when needed. The next benefit of accounting is evaluating our own performance. Accounting provides all the tools required to analyze and interpret the financial statements and evaluate our performance. The various ratios and statements, such as comparative, common size, trend analysis, fund and cash flow statements, enable the management to check the reports, analyze and interpret it, and take decisions to improve the situation. Comparisons can also be done across periods or products or even between organizations to improve operational efficiency. This also enables us to set targets or goals for the next accounting period or financial year. The final benefit of accounting is that we can apply for a loan if needed. Banks and financial institutions rely on audited financial statements or income tax returns to process a loan. Businesses may need loan to carry out their business operations in case the owners do not have sufficient funds invested in the business. In order to process and approve a loan, audited financial statements or IT returns are relied upon and are sufficient evidence to reveal a capacity to repay the loan. Accounting, especially bookkeeping, is like a mirror. A mirror reflects our current and true image. We look into it whenever we can to view ourselves, to view our appearance. If we notice something on our face or clothes which we do not like, it's a normal human tendency to check and correct it and leave the mirror when we are satisfied with our looks. We can keep on adjusting ourselves till either we are satisfied or we need to take corrective action to improve our looks. However, the mirror must be clean to reveal the right image. A dirty or damaged mirror may provide discomfort in looking at ourselves in it. Maintaining the cleanliness of the set of books or accounting system is very important. If the records are entered correctly without any mistakes or omissions, it will reflect the true and correct state of affairs about our business. This information enables us to take corrective actions or decisions to improve our current situation. Therefore, it is very important to record the correct information. Incorrect or misinformation may mislead you. After all, the main objective of maintaining accurate information or a clean mirror is to derive maximum satisfaction or take corrective actions to improve ourselves till we are satisfied with the results. This brings us to the end of this topic. In this topic, we have learned the objectives or the main purpose of accounting as well as its benefits and advantages. In the next topic, that is topic 4, we'll have a look at the accounting principles or concepts and conventions. It deals with the assumptions as well as common practices related to accounting. If you have found this video interesting and would like to learn bookkeeping and accounting, please do subscribe to my channel and click the bell icon to get notified whenever a new topic or chapter gets uploaded. The entire list of chapters, topics and related video links are in the description section just below the video. Click on the Show More button to view the complete list. Please click on the like button below and leave your comments as well. You can also share the videos by clicking the share button with your colleagues and relatives so that they too can benefit from this series. Thank you and stay connected.